Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, January 24th, 2022. Just wanted to get one out to you guys with the markets moving, and just reiterate we've had nothing but additional check marks over the last few trading sessions. In other words, taking out, all the really started here. That's where I said that would pretty much be it when we failed that level right there, the recent trading ranges. And again, we've taken out the 200s, we've taken out additional support levels. So nothing but check marks. However, I mentioned you might want to, depending on who you are, and I'm going to speak, and I always try to speak to all the different traders out there. I wear multiple hats myself. I have IRAs and college funds. Those are long-term positions. I'll swing and trend trade those. I'll sit tight. The active trading account, I will loosen up, lighten up on short exposure, add to short exposure, go real heavy, real light, even go flat at times in that account. But so I'm going to talk to you about what to do if you are a active trader or a more of a less active swing or aka trend trader. Number one, let's just start there. Let's just start talking to the trend trader. The trend trader, I've had nothing but check marks all across the board. It started back here weeks ago. We had sell signals on the 60-minute charts, then the daily, and then the weekly. And we hadn't had that in a long time. We'll just talk about, for a while we could have this drop and that drop. Well, it started back here with these bearish engulfing candles. You had a nice on the weekly, and again, this is a much more significant time frame. And then it was a check mark. We'll follow up with the additional red candle, but then we went sideways. So again, from the weekly time frame, I was waiting for the next key check mark, which was, and we got a break below that recent trading range, because remember that then was a failure of the all-time high, the previous high right there, the breakout. It was also a nice solid move we get last week below this trend line. We parked the week before right on there. So at that point we had additional check marks. The uptrend line, the 378.86 level was taken out. Now we never moved back above that bearish engulfing, and then we took out the 40-week. But here's where we're at right now, and I'm going to try to do this video quick to get out to you. We have just hit the first target on both the weekly and daily chart. These are targets that have been laid out for quite a while now. You can see here when I highlight the pop up the box, I created this line back on October 4th, and that's 342.16. These are your long-term targets. Again, there are no guarantees, but I would put the odds at very high that at least my next target T2 is going to be hit. However, I'm also going to put the odds very high that we're going to bounce. So as of today, I lightened up over the weekend. I didn't want to have too much risk in the trading account. Active trading accounts, the IRAs and non-active accounts, I left everything as is, but I've just closed those out. I'm a sometimes semi-active trader there because I think we're going to get a decent bounce. So I've actually timed to reverse long and cover up because the first target's hit. So if you're, again, an active trader, if you're not an active trader, look, and there's no guarantees, as I said. We could do this, but this right now is just a single leg down. Typically corrections happen, and usually at least an ABC move, but we'll see. Here's one where we went down, but not nearly as much. And all I can tell you right now for certain is that we're at pretty decent support. That's that level I had, and therefore the odds are pretty good for a bounce. We also never had a reaction yet on the 200-day, and sometimes you overshoot it briefly and you go back and test it. So your bounce targets right now, if you want to actively trade, you have a backfill of today's gap, which would be pretty much a very likely target. So that you look at Friday's low, which is about 351.40, and so you can see we're trading at 342.03, my top of my first target zone. Now that's the thing, a zone is what it sounds like. It's an area where if I have a pretty hard line, that's going to be a single level where it's a well-defined support level. This is more of a zone based on what I see back here in price action, all that. But we're at the top of the zone, and we're also at that single target on the weekly chart. So again, on the weekly, it's fairly well-defined, and then on the daily, it's more of a zone. So we could overshoot it. We could come down into the zone, but hey, anything's possible. We can blast on through there, but I wanted to also point out this. We are, at this point in time right now, the RSI is at, you probably can't see it in the video, we're at 2304. That is lower than this initial leg down when COVID first riled the markets. took hold of the markets and shocked every, the major indexes. We dropped down into February 28th, I think it was, right there, that candle, and we had a low. The RSI was at down to 2727. And so again, we're more oversold. I think that was the bottom if I hit it right. Well, there it is, about 27. Point being that we are more oversold at this point than we were on that initial leg down, and that was comparable. We dropped. I'm trying to measure it out for you real quick. About 17, yeah, about 17%, and then we had a nice healthy bounce. We were short on that drop. We reversed it there. Official on the site had to trade a bounce, hit up. I think there were two targets laid out. The second one was around that 10% bounce. So the point is, we are even more oversold than at that point in time. So as an active trader, I think it is time to go long for a bounce. We went through there. You have the Fed coming up on Wednesday, and we're again, most importantly, the initial tag of my targets. That's why I lay out additional targets. Each one is a level where I expect a reaction. A reaction can come in two forms. It could be a consolidation or a bounce or a combination thereof. And in this case, I think the odds are good for a bounce. So look, your obvious targets traders are going to be watching are the bottom of today's gap, which is pretty much where we open today, or you could look at today's highs, or the top. And the top's going to be better than if you reversed it right here, we're just inside that level. You're looking at a good about 3% bounce there for you. And again, this is what it looks like on the weekly chart. We're right there, and same thing. We'd have a bounce. Maybe the bounce could go all the way up to the 40-week moving average or the 200-day. That would be pretty much a maximum bounce target there, because I've showed you in the past, once the 200's taken out, that it then acts as resistance from below. So that's it. So there's a range. Doesn't mean we can't fall anymore. And now let me speak. So that's to the active trader. To the longer term trend trader, who this market's going to move fast, it's going to make your head spin. The futures are going to be down big at night or in the morning and then turn around and be up big. That's what you see when volatility spikes. And so I'm going to speak to that person, which I would just at this point in time, your average cost is going to be somewhere, way up in the top of the range. We had multiple shorting ops, and you can allow a wider stop to not get shaken out and just hold out. Like I said, you have a good entry price. There's no reason to let the profits go. So you definitely want to lower your stop to protect profits. And a good area is going to be around the bottom of that. Remember this basing pattern right here. And the 200 days will most likely contain things, but sometimes intraday you can pop them. Another strategy I like when trend trading, the longer term positions, is to use a stop based on a daily close, and that'll help avoid the whipsaws, because intraday sometimes you pop key levels, you pop support and then reverse. We could come down here today, could do this, pop 335, and then only close the day back on there. Now let's look at SPY real quick. Again, I want to get the video out to you guys. So SPY cut through the 200s like a hot knife through butter, and that's unusual. It's happened. I've seen it happen before. But usually when it does, it's momentum fueled overshoot. You've heard me use the term 100 times, something I made up, where you have just tremendous downside velocity or momentum heading into that, and you cut right through them, and then just like a support level on the downside, or if it's a strong stock on the upside, you may bust through resistance and then come back and then close or trade on that resistance for a while. That's what I call the momentum fueled overshoot, and so that's quite likely what this is going to be. For the same reasons I talked about last week, the Fed's on deck Wednesday afternoon. Their meeting starts tomorrow. And look at this. SPY is at my 424.45 target. Not there all the way there, close enough. Again, when you have a 425 point security and your the low of the day was 425.75, that's close enough. You're talking a fraction of 1%. So that's it, guys. I'm not going to beat a dead horse. I'm just going to say that we are now deeply oversold on the daily chart, rightfully so. The technicals were all pricing this in. I talked about the POR, point of recognition, and that's where it came. Talked about this for weeks, that beautiful sideways trading range. You look what happened. See, that's that waterfall selling I was talking about, and trying to day after day, warning that this is, a likely scenario when the dam breaks, and the dam broke, and then you see they just don't let the longs out, and they don't let the shorts in. If you weren't short, I can tell you right now, I know this because I've done this long enough. A lot of you want to be short, and I'm going to get the questions. Randy, I didn't. Where's a good place to short? Not here. We could look. We can continue to waterfall. I told you the crash potential is up. Market crash warning or the tornado warnings are high, and sometimes you just do this. I don't think it's going to happen yet, and especially not in front of the Fed. If that's going to happen, Fed's going to say something. We all know Powell's the market's hero. The bulls love him. I call him Jerome Sunday Morning Powell because he's easy like Sunday morning. He's probably almost certainly not going to shock the market, but that's the thing about the market, and it's right now. Good news is good as bad news. It's being dismissed, and bad news is bad news. And no matter what, again, this is just a crowded rush for the exits. I said it before. I'm just amazed that the institutions and individuals, they knew the rate hikes were coming. They're still coming, and they waited to the very last minute. And this is what happens when you have a crowded rush for the exits, because the sentiment and positioning was lopsidedly bullish. And so when you have very little short interest and a lot of longs, they're like, hey, you know what? We're going looking at a rising rate environment. Why not start booking profits? Well, when everyone does it at once, this is what happens. And we can do this. I just want to say that we can do this. So, again, to reiterate, a very active trader, aggressive trader could certainly try to game a counter trend bounce to where, again, you have today's gaps right there. There's your magnets. A lot of traders will focus on these gaps, and look at that. The top of the gap comes in with the 200 simple right there in red. That's where about where the top of today's gap is, and there's the bottom. I'm sorry, the 200-day simple moving average. So that'd be about a max bounce target. And look, if we somehow happen to get up to that 450 level, that would be a great shorting op if we get there. I don't think we're going to get there. So to keep it simple, if you miss the move and you want to be short, well, the same bounce targets we have, again, a backfill of the gap. So we'll just say and give you a number, about 4 on SPY. Again, I'm not a big, you can short SPY or go long, but that's about 438, 439 or so. Actually, the gap's all the way down about 438 up there. So that would be an objective area to start scaling into shorts or adding back shorts or selling longs. Or what I like to do is let things ride too. If you're, again, a less active trader and you've got a hold of this and you have some nice gains, just trail your stops down, because sometimes you think the market's going to bounce at one area and it keeps going. So these are all ratcheting stops. You can do that automatically through a broker. You do a trailing stop, good to cancel with a percentage trail, like say 3%. Volatility's high, that's the norm. Actually, you can see intraday swings from high to low of over 3%. But, you don't want to give back too much. So trail it down. A tight trailing stop in this market would be 2 to 3%, I think. And you may get this. Although I think that's the most likely scenario, again, because we're at these initial tags of these targets. Almost there on that 424.45 on SPY. That was a daily. On the weekly, I gave you this first target right here, 426.32. So that's it. I don't want to beat a dead horse. It's a common theme where you've hit on both SPY and QQQ, the two leading indexes that I follow, the big ones. We have hit my first targets almost to the button on the weekly charts. As such, I believe for an active trader, it makes sense to cover shorts, at least lighten up if you didn't heading into the weekend. And or active traders could certainly try to game that bounce. You can see it right here. There's a gap. There's the 200-day. Same as a 40-week on this weekly chart. And then get back short again. Get a 3% profit on your bounce trade or something, whatever your number is, or trail it up, maybe get more, and then back short again. All right, I'm going to stop it here just to get the video out to you guys. Sure, there's other things I want to cover. I want to do updates on all the commodities and bonds and gold and silver, but for now, let's just look at the market because we're at these first targets, and that's pretty significant. This has been Randy Finney with Right Side of the Chart. Have a great day.